Hey everyone, it's Leo here. And today we're diving into what I would call, and I don't think this is an exaggeration, a slow motion crisis for New York City's affordable housing. And look, the numbers coming out of this new ANHD report are, honestly, they're staggering. Nearly 170,000 units, specifically 169,561. That's how many affordable rentals are at risk of losing their protections by 2037. And that's just the official count. There are even more if you include home ownership and some state-funded projects. But let's stick to what we know for sure. So, the way this happened is kind of a ticking time bomb. For decades, New York City leaned on these time-limited deals. Basically, you get a bunch of affordable apartments, but the affordability is locked in for a set number of years, usually 30, maybe 40. It worked for a while. We got a lot of affordable housing built between 1987 and 2007, almost 300,000 units, which is wild. But now the clock's run out on many of these agreements. Once those covenants expire, a landlord can basically start charging whatever the market can bear. And in this market, you can imagine how fast rents can skyrocket. And here's the real kicker. This isn't just a future doomsday scenario. It's happening now and it's been picking up steam every year. 2017 was about when the earliest expiration started. And by 2020, nearly 19,000 apartments in a single year lost their protections. So the drumbeat just keeps getting louder. They're calling this a slow motion crisis. But if you actually know folks living in these buildings, you know it doesn't feel slow at all. When I first moved to New York in 2010, and this is going back a bit, but I still remember seeing neighborhoods, especially in Brooklyn, flip so fast. One year, you'd see whole buildings still protected and rent controlled. Next year, new market rate tenants. Totally different demographics. A coffee shop instead of a laundromat. You know how it goes. That was before this cliff even really started to show up in the data. So from what I've seen, these expiring covenants don't just mark a statistical trend. They change the fabric of the city. And it's picking up speed. Now, let's dig into why this keeps happening every few decades. The ANHD report lays it out pretty starkly. Less than 1%, so basically a rounding error, less than 1% of all those subsidized units built were set up to be permanently affordable. The rest, all time limited. It's almost like we're just renewing the same crisis over and over again. Every generation climbs a mountain, then just slides right off the other end when the contracts expire. Permanent affordability, that's the gold standard people are talking about. It means once a unit is marked as affordable, it stays that way. Not just for 30 years, not for 40, but, forever. There are a couple of really interesting models here in New York already, like community land trusts. For anyone unfamiliar, that's when a nonprofit owns the land and stewards it for community use. So even if buildings change hands, the affordability is locked in. There are some nonprofit housing developers trying a similar thing, using their structure to prevent a unit from flipping to market rate. It's baked into how they operate. But let's be real. Scaling these models citywide is a massive challenge. You're talking about new financial tools, way more public funding, and not to get too into the weeds, just a huge amount of political will. Could New York expand these approaches enough to really put a dent in that nearly 170,000 unit risk? It's tough. There are folks in the industry, and sometimes I'm one of them, who wonder if the cost per permanently affordable unit is realistic in a city with this much pressure on land values. But the alternative, honestly, is keeping ourselves locked in this endless rinse and repeat cycle. We saw last episode how regional differences and migration play out with opportunity zones. But at its core, if you don't solve for permanent affordability, you get the same roller coaster in every cycle. That's a terrible analogy, sorry, but you know what I mean. So, that brings us to the elephant in the room. Why can't we just extend all these covenants or make everything permanently affordable? ANHD points out that, yeah, the funding structures for these buildings are super complicated. You've got owners who, look, I get it. They need to pay for maintenance, insurance, all the rising costs. And the only real incentive for them to stay affordable is government support or tax credits. When those dry up, most are just going to flip to market rate. The reality is, preserving affordability takes ongoing public investment. And it's almost never happened without the city or state stepping in. Programs like the low-income housing tax credit, which, by the way, comes with its own expiration date, or even city-level funding are essential for this stuff to work. You need all levels of government aligned, and this is key. You need to figure out mechanisms to keep owners interested in renewing those agreements instead of cashing out. The ANHD report mostly focuses on New York, but zoom out. And honestly, it's happening in cities everywhere. Chicago, Boston, LA, all staring at the same affordability cliff. They built up their subsidized housing decades ago. Those terms are up, and now it's a game of will they or won't they renew? One idea floating around is to offer better incentives for landlords to renew, create a permanent housing preservation fund, or even lock in affordability on new deals from day one. And then there's what I see on the ground in mortgages and real estate market deals. When a building's covenant is about to expire, the negotiations for extension often get tangled up with questions about refinancing, prepayment penalties, and all those things we talk about when market conversions come up. Honestly, it's a whole ecosystem. If you don't factor in how lending practices, debt, and investor incentives work, you just patch the hole for a few more years. So, to wrap up, we're at a point where not just New York, but cities across the country are facing this recurring crisis. And unless we rethink how affordability gets preserved, the next generation is just going to be dealing with the same mess all over again. That's it for today. We'll keep digging into both the immediate fixes and the longer-term shifts in housing policy. So stay tuned. I'm Lior. Thanks for joining me, and we'll catch you next time on the Nadlan Forum Podcast Daily.